Hello, everyone. My name is Jolene Schaefer, and I'm the Marketing Coordinator for XWK Technologies. I'd like to welcome you to our webinar, How to Turn Excess Stock into Profit, presented by NETSTOCK. A little housekeeping before we get started. Everyone has been placed on mute to keep the background noise down. However, you can submit any questions you have throughout the webinar. To submit a question, look for the question section in your GoToWebinar. We will answer all questions at the end of the presentation. We are recording this presentation and it will be distributed tomorrow to all attendees as well as to those who registered but were not able to attend. Please take a moment at the end of the presentation to answer our 2-question survey. With that said, we appreciate you taking time out of your busy day to attend our webinar. We're here to help you get the most out of your software solutions and help you find an easier way to run your business by providing you software and industry knowledge, tools, and support wherever you need it. We've invited NETSTOCK to present today because they are the industry leader in inventory optimization. So whether you're here doing research for a new solution or you're just here to learn, we'd like to encourage you to ask any questions throughout the webinar. Lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. So we encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel. Without further ado, I'll hand it over to Russ.
All right, thanks, Jolene. I appreciate that. Go ahead and share my screen here. And you should be ready to go. You're seeing my screen?
Yep, looks great.
Okay, excellent. Well, thanks, everybody, and thanks to SWK. Thanks to all the attendees for spending some time with us today, whether it's live now or in a recording later. We appreciate your interest. And we've got plenty to talk about. We're going to discuss how we can turn excess stock into profit in your inventory-based organizations, and we look forward to that. Probably got 30 or 40 minutes worth of content, and we'll have some time for Q&A at the end, as we discussed. Just real briefly about me, I've been in this business for a long time, was a Sage reselling partner for many years, and have worked on the what's called the ISV, independent software side of the fence, for the last 10 years or so. So just been involved in a ton of different ERP installations across different software products and manufacturers and so forth. So hopefully I can bring some good experience to bear. And at NETSTOCK now, what we do is we work with a lot of small, medium-sized businesses really across the country and really around the globe. We are a global operation. And of course, these are inventory-based businesses. So distributors, manufacturers, retailers, e-tailers, and oftentimes now a combination of those, right? We've got plenty of customers out there, businesses out there that manufacture some of their product, buy others, they distribute those, and they may even have their own omni-channel retail sites, whether their own or through third-party environments like Amazon, et cetera. So it's become a very complicated environment, and sometimes supply chains have become just as complicated for getting that product in the door or manufacturing it. And so for most of those businesses, the value of the inventory is one of the largest, if not the largest asset on the books, maybe second to their real estate holdings. But either way, it's critical to their business, right? It's actually a core part of what they're all about as an organization. And so therefore, managing that asset and managing as well as possible is absolutely critical to profitability. And those are the kinds of businesses that we work with every day around the globe. And of course, the majority of those businesses have some sort of an ERP or accounting software system in place, right? And they rely on that to keep track of the transaction flow, the ins and outs, et cetera. Oftentimes, we find that there are also third-party add-ons of all different kinds. It might be Avalara for sales tax calculations. It might be a warehouse management system to track the ins and outs of inventory and pick, pack, and ship, and automated shipping systems. So we often see that there are third-party best-of-breed applications that are a part of the environment. And but then we also see Excel still being used quite a bit, or some spreadsheet application being used for various purposes, right? And we'll talk a little bit about the pros and cons of the spreadsheet side of that for what we're talking about. But before we do that, I just want to dig into a little bit of a side topic just to give this a little bit of context, and that's the difference between inventory control and inventory replenishment. A lot of times when we think about the broader term or phrase inventory management, what our minds really come to initially is really what we would call the inventory control component of that, but there's more to it than that. But the control piece the management of the physical product involves things like the pick, pack, and ship, receiving product, sending product out the door, doing physical counts, hopefully doing cycle counts of some of your more important items, or figuring out some rotation there so that you can stay on top of those balances. And a lot of times, again, that's where we see one of the third-party applications, a warehouse management solution perhaps, that's using some sort of, whether it might be really simplistic or very sophisticated, there's a range of those, but somehow involving barcoding and handheld devices to capture accurately and quickly the transaction flow of those products in and out. So now the net result of that is you've got a great understanding of what products you have and where they are, and obviously this is critically important. And those third-party add-ons in conjunction with your ERP or accounting software do a great job of giving you that piece, right? And it's critically important, but it's not the whole story, right? I mean, the flip side of the coin is it doesn't tell you, is it the right product at the right place at the right time? It doesn't really address what we would call the inventory replenishment or inventory optimization aspect of inventory management. And I have found over the years that many people don't really think about that readily unless they're prompted to think about it, which is one of the purposes of this conversation we're having here today, right? There's more to the inventory management function in your business than just the control piece. We really need to understand getting a handle on what future demand is, what to buy, when to buy it, how to prioritize those things. And again, that's the function that we unfortunately often see Excel being used as the tool to assist in that piece of the project. And so what it doesn't ever really address with that tool is proper forecasting, helping you really expedite the ordering and the prioritizing of where you have issues that need to be addressed. And we'll talk some more about that as we go through our presentation here today. So let's really understand what the issues are, right? What's the impact on firms when inventory is not optimized, when we're not doing the best possible job of managing this? Excuse me. And really, there's three key things, right? It results in running out of stock in certain items. Oftentimes we see at the same time we're accumulating too much of other inventory items. And in the meantime, the folks that are the buyers and planners and trying to manage those sort of two competing interests in the organization just have a lot of wasted time and effort because, again, they don't have proper tools. But clearly the worst thing that can happen is running out of product when a customer has a demand or when a production facility has a need for a component. And if we can't fulfill that need or demand, you've got a real challenge. If you're shutting down a production line, we know how expensive that is. And if you have a customer that you can't satisfy, you not only risk losing that particular sale, but if the customer goes elsewhere to find what he needs and has a positive experience with a competitor, you may lose that customer altogether, right? So, and in today's Amazon-driven world of expectations and how consumers are treated today, when we think of that B2B environment, that's the mindset that is in play. So it can be really hard to recover from that. The customer loyalty is not what it once was. It's really, especially if you have a more commoditized product, your customers will go where they can to get satisfaction. And so that's a real problem. It's the most serious problem that can occur if you're not managing your inventory levels correctly. But the way that most firms solve that problem, unfortunately, is by simply buying too much. And they don't really understand and get a full grip on what the downside of that is. And that's where we're really going to focus our time today, is on that excess stock issue. But again, turning to those buyers and planners in the organization, and maybe some of those are you on this call listening. What we see is folks running around, putting out fires, getting yelled at by the C-level and accounting folks for having too much inventory on the books, and getting yelled at by the folks on the sales side for running out of product. And they're in a very difficult kind of in the middle of these challenges, and again, using all kinds of manual processes, right? Running through the warehouses, checking stock statuses with pad and paper, and double checking numbers that they don't have confidence in, and so forth. Very challenging environment, very difficult role. So today we're going to focus on that excess stock issue, right? And as I mentioned, unfortunately, the easy solution to the stock out is simply to overbuy, resulting in this costly excess, and it's really a profit eater. That's the bottom line. So one of the things that I want to discuss initially here is there's a big difference between safety stock and excess stock, right? We understand it's important to understand the difference between those two terms. Safety stock, or sometimes referred to as buffer stock, is really necessary, right? And it's the result of a defined policy. It's intentional. It's designed to manage the processes and the risks in the supply chain, right? So it's done on purpose, and it needs to account for things in your supply chain, like your replenishment cycle. What are your lead times looking like? What's the seasonality of your items? Maybe other fluctuations in demand that may occur. So there's a number of things going on in the supply chain that create risk, right? Like, what if my suppliers don't perform as expected? I'm expecting a 6-week lead time, and here's a supplier that's typically more performing at 7 or 8 weeks. Or I'm expecting 100 quantity of some item and I'm getting 80 or 70, and then another time 120, right? Either too much or too little. So there's risk associated with that, and we need to understand that and measure that. And there's also forecast volatility, right? I'm expecting my demand for product XYZ to be, 100 a month, and here I am halfway into the month and I've already sold 80. Well, is that because I always sell those 80 early in the month? Or is it because I'm running ahead of my projections? So there's risk factors there. And so a conscious safety stock policy and calculation really needs to accommodate those risk factors. It's a planned approach, right? Excess stock, on the other hand, is the stock that's above and beyond that safety stock or those buffers. And it's all policy driven. It's not intentional. It's really often just the result of a lack of insight into what's going on in your supply chain, kind of an inability to define what a proper safety stock is. So if I'm guessing there, I'm going to overbuy again, right? Because I've got to cover risk. And so the lack of analytics and the lack of visibility creates that very hazy picture, and the easy way out of that is simply to overbuy, because again, the worst thing that can happen is that I run out. So there's a lot of factors there, but I want to make sure that we all understand the difference there between an intentional safety stock, a buffer to manage risk, and excess above and beyond that. Excuse me. So now let's talk about the impacts and the real costs of excess stock. All right. To me, the biggest problem in all that is all the working capital that's tied up in inventory, sitting on warehouse shelves. I've had customers describe it as, imagine I've got stacks of $100 bills sitting on a warehouse shelf, just gathering dust, right? And that's probably a pretty good visual. That's serious money that could be used elsewhere in the firm to fund other profit creating initiatives, right? That money's not doing you any good just sitting there on the shelf. It could be put to work. And who on this call and then generally in our business experience doesn't struggle with managing cash flow, right? Every small, medium-sized business does. We always hear the phrase cash is king, and cash flow is critical, and so forth. So if there's a stash of cash sitting in the warehouse right now, which I almost can guarantee you there is, what could we be doing with that more productively, right? And then the other problem is really more tangible, right? That first one's a little bit fuzzy, but the more tangible thing is there are actual hard carrying costs associated with inventory, and so accordingly also with excess inventory. So those carrying costs include things like property taxes, insurance. I'll have shrinkage, either due to breakage or theft or obsolescence, or I just lose stuff, right? If it sits around in the warehouse, it gets shoved to a back corner somewhere, and I just lose track of the fact that I've even got it on hand. So most experts will peg those costs, and of course there's the rent in the warehouse and the cost of the labor cost of counting it or moving it around and so forth. So most experts will peg those costs at about anywhere from 18 to 20% of the value. So that's a very significant, potentially really big number depending on the size of your inventory, but certainly a significant out-of-pocket cost. So there's really two sides to this cost of excess. It's tying up cash that could be used elsewhere, and then it's the actual hard cost going out the door. So we might want to just do some quick back of the envelope math on this, right? Think about this for your own organizations right now. We often find 20% or 30% of excess is very common. But for easy math and just to be conservative, let's use a 10% figure, right? And again, let's assume, again, for easy numbers, that you've got, say, $1 million worth of inventory on the books. And so you can easily do the multiplier if you've got 2 million or 5 million and so forth in your organization. So if we use that 10% number and that $1 million number of inventory, that means very conservatively, you've got $100,000 in excess inventory, right? Those dollar bills gathering dust sitting in the warehouse. And so that's a lot of capital doing nothing for you again. But then on top of that, if we use a 20% carrying cost model, that's $20,000 of hard costs out the door, right? Every year. That's, what is that? I think $1,700 a month or something like that, needlessly. Every month, every year, forever, right? It's an ongoing cost. And again, that's a very conservative number. More than likely, it's twice those percentages, right? It could easily be 20%. And you may have more than $1 million of inventory. So think about what, where do you sit in that? What's your number? A lot of times when we talk to our clients and prospects and we ask them, they'll readily admit that, yeah, it's probably 15, 20% or more that they have sitting there in excess, and they know it. They just don't know necessarily what to do about it. And it's just, it's almost like a cost of doing business, right? It's just the way it is, nature of the beast type of thing. And nothing could be further from the truth. There are things you can do. But so do your own calculations. Think about that a little bit in your own situation as we continue to discuss the rest of the topic here. So what can you do? What are some of those action items that you can handle and take in your organization? Clearly, again, you have a very valuable source of data in your accounting or ERP application, whether that's a Sage ERP, Acumatica, or whatever the case may be. It should do and can keep you up to date very well on all the transactions and history and the ins and outs, right? We've got all these very detailed, granular data files. We're capturing all this stuff all day long. Our operators are doing data entry and plugging all this data in, all the shipments and receipts of goods and movements and transfers from one warehouse to another. All that's being captured, but it all tends to be in a variety of different tables and files, right? If you think about it, there might be 10 or 15 different tables or files within the structure of the accounting software that capture bits and pieces of all this data. So what you really need is figure out how to gain visibility and insight into all that data, right? But so there are some steps you can take. You can certainly run reports. You can work with your SWK consultants to help you locate that excess, run those reports, deploy that excess in various ways, right? There's things you can do with that excess inventory. But the source of truth is there. You just got to kind of dig it out and identify where that excess is. What items are they, and take action. Put it on sale. Send some of it back to your supplier if you have that ability. Maybe you've got a friendly competitor in another geography that you don't really compete with, or a peer of yours that you meet at a trade association event or something, and they sell the same products. Maybe they'll buy it from you at a lower cost, right? Saves them some money. Maybe donate it to some local charities or whatever the case might be, but you need to do something. You need to get rid of the excess stock. It's not doing you any good. And especially if it's slow moving, if you can identify some of those items that are slower moving than others that you're going to be sitting on for a year or two, while you over time, get normal attrition to reduce that quantity, that's just not going to work for you. You're better off getting rid of it, cutting your losses, if you will, get that product out one way or another. Then the next step is, of course, you need to make sure that you don't have purchase orders out right now for some of those same items, right? Our term for that is what we call a surplus order. So there's no sense in discounting, selling off, getting rid of excess product, and then you've got that same product coming in on a purchase order right now that you don't need. It's just going to go right back into an excess status. So delay or kill those orders immediately as well. And then again, we would argue that most importantly, from a preventative standpoint, right? So there's some things you can do with what's happened already, but now to prevent the problem, you really need to develop and implement that coherent safety stock policy. You really need to understand the supply chain and develop an understanding of what a proper buffer stock is, and then that helps you define what you need to purchase when, right? So, and with each of these different steps, it's ideal to focus on the most important items first, right? Figure out some way to prioritize which of these items need your attention the most, and in the case of excess, that's oftentimes the slowest moving items. Again, maybe you can identify those and work on those first, because the faster moving items you may be able to just resolve through normal attrition, as long as you're not buying more of it, right? So, so there are some things you can do. And when you do minimize that excess and free up that capital and save those hard costs, what happens? Only good stuff. You can launch those new initiatives that I alluded to. You can invest in more equipment or people or develop new products and markets, right? There's just so many different things that you can do. There's probably queued up projects that in your organization that you haven't been able to get to for lack of cash flow. And now is the time, right? All of a sudden I'm finding money that I can do these other projects with that are also hopefully profit generating, projects and opportunities that we can take advantage of. We recently published a written success story and then actually did a video for a customer called True Audio. You can find it out on our website. And they're a perfect example, right? Within about 9 months of deploying the NETSTOCK application, they freed up nearly $1 million. And that was a big percentage. They went from about 3.5 million to I think 2.6 million in stock value, and at the same time improving their fill rates to their customers, mind you, right? It wasn't because they were getting rid of excess and not being able to fill orders, just the reverse. They were actually improving their customer sat and fill rates. At the same time, they were reducing that excess inventory. And in their case, they used most of that cash for R&D projects, which allowed them to release 3 new products to the market that helped them leapfrog the competition. So think about the multiplier effect of that found money, right? It's really incredible. And again, we've got a good success story, some great quotes, and they were coming out of an Excel background, right? We're trying to use Excel spreadsheets to drive the solution, to drive their replenishment and purchasing process. And so that True Audio story really is a real common one, right? This is what we see all the time. Again, using the wrong tool to try to solve a critical problem. They had a very capable ERP. They had really good data, right? Just like all of you do. They were capturing things on a timely basis accurately, but they were again using a spreadsheet, using Excel to try to forecast their future demand, develop that safety stock or buffer stock policy, and decide what to buy. And it led to exactly the problems that we've discussed, running out of some things and having too much of other things. So clearly using a spreadsheet's the wrong tool, right? And I understand why it's so common. After all, it's there on everybody's desk, right? So there's no out-of-pocket costs. Pretty much everybody has it. It's relatively easy to use. We've all done some things in Excel, right? So at a basic functionality, we can all do some things. But we also know that in every organization, it seems like there's at least one Excel wizard on the team somewhere, or somewhere in our circle, and that person can, in theory, build some really amazing formulas and worksheets, etc. A fabulous tool, right? That's not that I'm anti-Excel. Think of the impact that Excel and other spreadsheets have had on our organizations over the last 20, 30 years, and it's phenomenal, right? It's an absolutely great tool. But for this purpose, for the purpose of managing inventory demand levels and so forth, there are some real problems with it. We've actually written whole blog posts and done webinars just strictly on the topic, so I'm not going to spend a lot of time with it here, but there are real issues associated with it, things like the data accuracy and synchronization. How do I extract the data from, again, all those different disparate tables and files within our accounting software, and how do I get that stuff out together on a timely basis, right? And a lot of times we see customers that have, they stay late at night, or they come in on a Saturday morning when everybody's off the system, or most people are, and then they start doing their extraction of data. So they dump all their warehouse files, and they dump their purchase files, and they dump their sales files, and it may take a couple hours. And so things are already out of sync and inaccurate at that point. But then there's also issues of, is that just one person in the organization? Maybe that's you listening to this presentation. Maybe that's one of your roles in the company, is driving that process. And what happens if that individual is out sick or on vacation? Can anybody else manage it and understand what's going on in the spreadsheet? If you've ever picked up somebody else's spreadsheet and tried to figure out their formulas and formula flows from one worksheet to another, you know how challenging that is, like picking up somebody else's programming, right? It's not easy to do. So there's a control issue. And even worse than illness or vacation, what if that person leaves the organization? And of course, we've heard that story many times, that now that key person left, nobody else knows how to run it, and inventory's gone to heck in a hurry because nobody understands how to use those tools and they're starting over. But there's also just other realities are, in terms of a best practices approach, right? There's other inputs that don't exist in the accounting or ERP environment, right? Like that, some of that supplier performance stuff and the safety stock calculations, those are additional inputs. And you never are at a static point, right? You think you got it figured out, and as soon as you do, you know something's going to change. You've changed some purchasing process, you've changed some way that you receive product on the docks, and or maybe you've got other complications like bills of materials. You're doing some kitting and assembly work, and so how do my spreadsheets accommodate that? So just a ton of challenges in trying to understand how a spreadsheet could really get you to a best practices approach, right? Very difficult. So again, ERPs can do a great job of giving you the raw data. That accounting software is all very well organized, that the data within them is very well organized, but you just got so many complexities in the typical supply chain today. And one of the reasons that we really have had success with NETSTOCK is because our background is in the large organizations. We've the founders of the company and many of our other management team and support folks have worked in very large multinational organizations with very complex supply chains. And the reality is now that even the small, medium-sized business has some of that same complexity, right? Buying some products or all products from overseas, maybe using third-party manufacturing for some of those, selling through that omni-channel environment, maybe using third-party logistics warehouses across the country for their distribution environments. So you've got products spread out all over. So visibility becomes a real challenge to manage those complexities, and that's just the reality. So, no matter what tool you're using, though, whether it's your ERP and augmenting that with spreadsheets, I don't care if it's pencil and paper, right? Some sort of an add-on application. The goal of this, really what it comes down to, is optimal orders, right? I need to buy the right product at the right time in the right quantities. That's really what drives the process. And so what the whole goal of this whole effort is to create that optimal purchase order as quickly as possible, right? So the right tool will help you create those smarter orders, give you that better visibility as to what to order when and why, right? Understanding the why behind that. And then as a result of that, improve your fill rates to your customer satisfaction and loyalty and retention, right? Which drives profits. And then hopefully that environment then synchronizes with all that raw accounting ERP data. And then as a result, also helps you then cut down on excess inventory because you're buying smarter, right? So you'll know you found the right tool, right? Because you'll get the results that we've just talked about. But even the right tool won't necessarily work if a couple of things occur. One, if implementation is too difficult, if it's too challenging for your team or your folks to understand it, to get it up and running, to get it installed and tested and so forth, and get confidence in it and really trust the numbers. If that's too difficult for that to happen, then it might be a great tool, but it's not going to work for you because of that, right? Or secondly, it might be a great tool that's easy to use, but it's too expensive, right? If it's just not in the budget, then that's a problem. And again, with our experience with some of those larger environments and that we've talked about that NETSTOCK folks have, some of those were multi-million-dollar and year-long implementation projects and so forth, and so that's not realistic for a lot of small, medium-sized businesses. Just can't do it. But another issue that we also run into is if the organization itself is just not ready to embrace change, right? If your team doesn't agree to use it and don't embrace the application and the new approach to doing business, I don't care how inexpensive it is or how easy it is to deploy. We all know that teams can sabotage, if you will, for lack of a better word, some of those changes. And change management is hard. I get it. Hopefully there's executive leadership in the organization that drives top-down adoption that says, look, we have to do this, and here's why. Again, I'm a big believer in the whys and understanding why this is important to the organization. And many times that can be helped with outside trusted advisors like your folks over at SWK, right? They've been through this process hundreds of times with other customers. They've got huge experience and domain knowledge in their team. I think you should leverage that, right? Leverage their ability to help you get through that change management process because that can be just as important as having actually the right tool, the right application. Make sense? So, so I think we've made the case that all inventory-based companies really face this same challenge, right? In understanding and managing those levels of inventory investment, and that's what it is. And we're looking for a return on that investment, and that's how we drive profitability, right? So everybody that has inventory in the organization struggles with it. It's an age-old problem. And I think we've made the case as well that firms that are using inadequate tools like spreadsheets are never going to meet the challenge, right? You're just never going to get over that hump. So let's talk a little bit then about a different approach that, you know, what I would call here the NETSTOCK approach. And so again, what we've done is we've built a cloud-based application. It's a tool for inventory replenishment and creating those optimal purchase orders. That is kind of the nirvana of this. That delivers all those key best practices, right? But it does it through a very user-friendly application, again, cloud-based environment. And we brought all those decades of experience that we've had with those larger businesses and very complicated supply chains and kind of scaled that functionality and sort of gleaned it down, skinnied it down a little bit to say, okay, what's realistic for the typical SMB? Let's think about who our audience of users are. These are maybe folks that are not necessarily degreed in supply chain, don't have experience at some of those bigger firms, perhaps. Maybe they've been promoted, moved up in the organization, which is great. Many times in the smaller firms, it's actually owners or upper management of the businesses that drive some of the purchasing decisions, especially if it's a very technically unique product or something along those lines where they've got the domain knowledge there. So we said, understand that audience and let's build an application that's really designed for that audience, for those small and medium-sized businesses. And its whole purpose in life is to drive more profit from your inventory, right? That's what we're all about. So, so what we've done is we've built this cloud-based app. So it's browser-based, built in the cloud for the cloud. So it's a modern application, modern interface that is available then on any browser, any device, anytime, anywhere, right? It grabs the data automatically from your ERPs. So it integrates with Acumatica, all the Sage ERPs and others as well. So that issue of timing and accuracy and synchronization of the data, that problem goes away. We just grab all the data at the same time at 2 o'clock at night through an automated process or whatever time we schedule. And then we grab all that raw data from all those disparate files and present it back in an actionable dashboard, right? Actionable information that's now at the fingertips of the user to say, okay, I see where I have a problem. I can prioritize those 4 problems. Those are the 3 or 4 I'm going to solve today. Tomorrow I'm going to take another look at a fresh dashboard. And so it's all very colorful and graphical, interactive, intuitive, and very rapidly deployed, and utilizes this kind of management by exception approach. Again, if I've got 1,000 SKUs or 10,000 SKUs, there's no way I can understand and grapple with all those. So help me prioritize, bring to my attention the items in my inventory that are in the worst shape, that have the biggest problems, where I'm about to run out, or I'm about to have too much, or I'm already in those states, or I've got forecasts that aren't performing or suppliers that aren't performing. Bring those to my attention in the dashboard through a management by exception sort of approach so I can knock those things down. And then, of course, we really need it to be very rapidly deployed and affordable. So the result is a very short time to value, so that you make the investment and within weeks, you're already getting benefit and value back. So that's really the goal of the NETSTOCK approach. Rather than fire up a live application of it, I just thought I'd share a couple of screenshots as an example of 6 of the 9 widgets that we have on our primary main dashboard when you log in as a user. So you can see we itemize and categorize items in terms of their status. Where do I have too much? Where am I already stocked out? Where am I about to have too much and about to stock out, that column on the right, what we call surplus orders and potential stockouts. So there we can be ahead of the curve, right? I can see things as they're happening and identify and solve the problem before it actually occurs. Wouldn't that be nice? And then tracking some nice graphics there that show me the trends. How am I doing over time, right? Each of those bars represents a timeline, whether it's weeks or months, and I can see very quickly how am I trending in these areas. Where did I start? What's my target? How am I proceeding and progressing along that path? to get to the ultimate goal of where I want to get to with the health of my inventory. And sometimes we call this a quick health check, right? It's like taking the pulse and checking a heartbeat. And because if you think about it, inventory is the heartbeat of the business. So how's it doing? How's it performing? Excuse me. So this is the dashboard that first comes up. Lots of color coding and visual cues for the users that we coach you on, train you up on how to understand what you're looking at and how to click then into different items and dig deeper in. So it's all hyperlinked and very user friendly from that perspective. So that's the dashboard. One of the key things that we do in terms of helping you prioritize where to spend your time and energy, again, the assumption is that especially in an SMB, there's constraints, right? There's a limited amount of time and energy, hours in the day for me to address all the problems that I may have. So help me prioritize which ones are going to have the biggest impact, again, on my profitability, right? Remember, again, our topic here today is how to drive more profitability out of this investment we've made in inventory. So one of the ways that we help with that is by categorizing or classifying the items within our inventory and ranking them not only in terms of their value, which is the ABC axis on the left, but also in terms of their speed of movement or velocity, which is the axis across the top, low, medium, high. And then we get this combined view of those items. And so the items in the upper right corner of this matrix, color-coded green, are my faster moving, higher valued items. These are my A items, right? These are big, important, mostly typically most profitable items, higher profit margins and so forth. So if in my day of limited time and constraints elsewhere, where am I going to focus my energy? If I back up to this dashboard, you'll see that's underneath these top 5 lists of items that are contributing the most to these various conditions. I'm seeing that classification and color coding. So now if I only got 10 minutes before my next meeting, right, I pick out these color coded items in green and say, okay, let's solve that one today. If I can do nothing else in the next hour, I'm going to focus my attention there. And so this color coding really helps us establish some of those policies, right? If I think about the items in the lower left in the red, those are slow moving, low value items. I might first of all question why I even bother stocking those, right? Maybe I could have vendor managed inventory, work with one of my vendors to stock more of that for me and get them out of my inventory altogether, get them out of the warehouse. Or maybe those are nuts and bolts or some small item that are critical to my production process. And since they're low cost, maybe just buy them twice a year and put them in the corner of the warehouse, get them out of the way, but I know I've got them, so I'm not shutting down a production line for lack of a nut, right? So I can make policy decisions now because I understand better the nature of the items in my inventory. And that is just so critical, again, for focusing my attention and making good decisions. So that's something that we'll automatically do and reclassify every single night. Another piece of what we bring to the table is the forecasting engine. So we've got some 15 or more algorithms built into our forecasting engine that are looking at historical patterns of consumption for every single item, whether it's consumed in a production process, and we understand bills of materials down to 99 levels, so I can have a finished good demand that blows through down to all those different components, or whether it's direct sales to my customers, or whether it's subsidiary warehouses that are fulfilled and replenished by a central distribution center. All those different demand streams roll up into a total consumption of that item, and then we can look at historical patterns of that and look for things like seasonality or certain trends or whatever the case may be. And so there's some very sophisticated math that gets applied to that history and is tested and then is presented as the most likely foreseeable future of demand for those items. And then we're testing the quality of that every single day so that we can capture that volatility and that risk factor that becomes part of our safety stock calculation. So some really clever things going on there, but very easy to understand. Again, very graphical, very easy to amend, right? I may have a sales manager that comes to me and says, yeah, that historical pattern is accurate for what happened, but we just signed a big deal with Walmart, and for the next 3 months, we're going to increase this demand by 30%. So now as a buyer or planner, I can easily apply that, amend this forecast, and now see what that does to my purchase recommendations as a result. So I can take that external information in addition to all that great math that we're doing and get a really nice picture of what's going on and what I need to purchase. And then when it does come time to purchase, just the last screenshot here before we open it up for some questions, is this is what we would call our order schedule, right? So we look at every item, we look at every supplier that we have and identify any items from that supplier that need to be purchased today, either to keep myself in a balanced state that I'm already in, or to get myself back into it because something happened in my supply chain, right? I sold more than I thought, or not as much as I thought, or whatever. So here's my purchase recommendation. Everything at my fingertips as a buyer. I can understand exactly why the recommendations are being made by NETSTOCK. You know, this one says I need 112, this one 1,093. Why do I do that? I can override that if I've got some other external knowledge that I can apply. I can easily see what's on hand at other warehouses and maybe execute a transfer instead of a purchase if I've got too much somewhere else. All that stuff at my fingertips, so I can very quickly and easily create that optimal purchase order. And as soon as I get this the way I want, I can help fill containers and look at all kinds of different cool tools. And again, lots of color coding and visual cues here that we train our users on. They really get an understanding, looking at all this very quickly, say, okay, I can see exactly what's going on. And yeah, I accept that recommendation, or I understand it, but I'm going to override it, right? And we understand minimum order quantities and multiples and things along those lines as well. So just a lot of great data, again, at the fingertips, interactive, color-coded, easy to use. Typically, you know, get people up and running very quickly and making better buying decisions than they've ever been able to make before. So I hope that was informative. I hope you understand a little bit better now what the issue is, why it's a challenge, what the impact of that challenge is, and ways that we can address it. And then also awareness of a tool that can help you address it with some of those techniques that we talked about in terms of how to action some of that excess stock. So I'm happy to turn it back over to you, Jolene, to answer any questions. But again, once more, thank you all for your time and your attention. Thanks to everybody at SWK for hosting us and allowing us to present to you today. And hopefully I can speak with many of you individually in the future at conferences or wherever we might cross paths. I'm always happy to answer questions, and you've got my contact information there. So Jolene, anything we need to address for the audience?
Yep, so we'll now open it up for questions. If you have any questions, please enter them into the question section of your GoToWebinar. And we do have one that's come through. Russ, so this one is, does NETSTOCK consider truck/trailer loading requirements in order to minimize freight coming across the country?
What was the first part of that phrase?
Does NETSTOCK consider truck/trailer loading requirements?
Truck/trailer loading, gotcha. Not directly. That's not a key piece of what we're doing. Our focus is really on the purchasing side, but we give you an awful lot of visibility, and there are certain data points that would assist in making those decisions. So I think the answer is strictly a no. It's not an area that we address specifically, but I think we can inform some of that decision making with some of the data that we bring to bear. Similarly with what we would call container management, right? It's not a true full-blown container management application, but if we're understanding volumes of our items, if we're tracking weights and volumes of the items in our database, and we know what the size of those containers are, we can optimize our purchases to fill a container efficiently, right? Maybe even overbuy a little bit of the faster moving items today, or accelerate something that I would normally buy next week, buy it now because it fills the container and saves me freight costs. So again, we're not necessarily doing the math on that, but we're providing some really good information to help with that decision process.
Wonderful. And then we just had another one come in as well. It asks, does NETSTOCK consider different lead times for different locations?
It does. It understands lead time by supplier, by location, as part of the analysis of that supplier performance, yes.
Okay, we'll give it another minute to see if any more will come in. And I think that's all. Oh, wait, we just got one come in. What is the pricing model?
Pricing model. Oh, great, great. Yeah, and it's a little bit unique, I guess, in the ERP space. It's not at all based on users and so forth. It's really all driven by the value of the inventory that we're managing in the application. So it scales very nicely. So if you're on the smaller end of the scale, you've got $500,000 worth of inventory or something. The cost is lower as a result of that, so it makes it still very attainable. But if you've got higher levels of inventory, our cost is going to be a little higher, but the ROI calculation is still really compelling, right? It's triple digits. It's off the charts. So so the pricing is strictly based on value of the inventory that we're managing in our application, and there's two components to it. There's a one-time, what we call an activation fee. It's a flat fee covering our onboarding. So NETSTOCK will do all the onboarding, installation, training, support, coaching you up and getting you ready to go, get you live. That's a one-time flat fee that scales again with that size of the inventory. And then there's the monthly or annual subscription to access the service and give you access to all the dashboard and all that data. So there's two components, and both of them scale based on the size of the inventory. Very affordable, very, very rapid return on investment.
Wonderful. Well, if there's any last questions, we'll give it a couple more seconds to see if any are coming through. Well, thank you so much, Russ, for your informative presentation and for taking the time to be here today. We really appreciate it.
You bet. My pleasure.
Wonderful. Have a wonderful rest of your day, everyone.